Good morning, it's Jonathan Barrett with this week's Market Buzz. That's Monday, the 25th of May, 2026. Well, okay, it looks like we might be getting close to a peace deal in Iran, which is quite good. US stocks up on deal optimism, which is great. Nvidia beat headline results. However, revenue guidance was a little bit low, which I think is a bit of a concern. Computer manufacturing Lenovo also had some strong results. Actually, in reflection, the S&P 500 corporate earnings were the strongest earnings since 2021, which is quite positive, not very good for our positions. Consumer sentiment in the States was revised lower to 44.8. Consumer spending revised to a new record low of 44.8. So quite a concern there. Yeah, inflation also hedged a little bit higher, which was a worry. And over in China, we had some pretty negative numbers. Housing prices, that's housing prices over 70 cities slumped 3.5%. Industrial production was lower at 4.1% versus the 5.5% that was expected. And retail sales was marginally off, down to 0.2%, and 2.2 was what was expected. In Australia, the unemployment numbers marginally softer, nothing too problem there, came in up at 4.5% from 4.3%. Okay, quite a bit to talk about this morning. And I guess the key there is, what's happening in the Middle East? Are we getting close to a deal? And what does that mean to the oil prices? So we'll talk a little bit about that in the recommendation trade for the week. But first, we're going to focus on the data that's coming out of China. Now, we've always talked about China as sort of an economy that has the resources when it needs it, and the stimulus when it needs it. And I think that's what we're seeing again, and we're still waiting for some more stimulus. We actually thought the economy was actually breaking out of its malaise, which has been that deflationary for some time, and we thought that things would start to help that and also help global growth. The numbers that we saw didn't show that, and to me that was a little bit of a concern. I think when you really look at it, when you look at how that housing price index, which covers, as I said, 70 cities around China, it's quite negative. When you see it just continue to fall. Now that also puts other pressures on the economy. It's a lot softer. Could we expect another group to go under, as we've seen before, or is it going to be nicely contained and eventually we'll get back to some growth? But I think that to me remains a concern. And I do think that when you look at the housing market, that's an issue. But then when you start to take a little bit more of a deeper dive into some of the other numbers, it is a little bit of a concern. And to me, that industrial production number, when it did come in, 4.1% compared to what we wanted was that 5.5, suggests that things are not as good as they seem. When you look at China and you can see where it imports its oil from in the Middle East, it is a concern. But hopefully that relief will just a little more flow into the economy, and that will sort of release some of the pressures, once they do get a deal or can get a deal. So I do think that to me is an issue, and I guess when you look at that, retail sales as well a little bit lower, and I think when you look at the historically the retail sales in China, you can see that it just hasn't done a lot. I mean, we used to get numbers, in 23 of plus 18%. Then we had in 24, numbers would come in plus 6%. But this is all quite anemic, and we're seeing no growth at all, and it's just bumbling around the bottom. So that to me remains a bit of a concern. From a positioning point of view, I expect a lot more fiscal and monetary policy to come out of China to try and lift it. That obviously a lot has been thrown on it. And I think the rest of the world, because remember, China is the manufacturing area for the world. So if that's having problems reporting, it's pretty hard to see how the rest of the world's going to follow. So I think that contraction is a major concern to have a look at. Okay, righty ho. So that's what we think of China. Hopefully things will start to pick up, and I'm looking forward to that to occur. But at the moment, she's pretty flat, and that's going to affect the rest of the economy. Let's hope we do get some news out of the Middle East, and that'll certainly revive. It is quite interesting that last week we talked about the US, and you look at the numbers and the corporate earnings, they don't seem to be affected as much. but in China, they do appear to be affected. So to me, that's something that we've really got to keep an eye on. Okay. Right now, let's have a look at some of the numbers which are due out. I guess in the States, they're the major concerns there. PCA inflation, we've got which is the Federal Reserve's preferred measure of inflation that comes out. That'll be closely watched. Expected to be a rude number, expected to be higher, and expect the market to react accordingly. However, I do expect the market to think that if there is a resolution, then the market will try and factor that in very quickly. So expect some sort of volatility or even just a continual movement higher in terms of the equity market. So let's see what happens on that side. In Japan, we've got a busy economic calendar, industrial production, retail sales. That's something to look at. Remember, the central bank there, has been active in the currency markets. And as a result of that, you might get a little bit of Bank of Japan intervention. That's if the numbers are that weak. But if they're strong, perhaps again we'll trade. Remember, the actual Bank of Japan do want to see that currency a lot firmer. Okay, let's now. That's probably the main parts of news. Reserve Bank of New Zealand comes out. They say a few things, but yeah, that's probably about it. Major note. Rightio, let's have a look at a few of the trades. Let me share my screen. Okay, let's share the screen. And there we go. Okay, first of all, the little Aussie battler there. We have been long for some time, and I think when I look at it, it's not a bad position. I think we might get a little bit of correction, but we've got good support here around that 71. We have been long for a way long time, down in those 61, 60, 62 levels. Any form of correction, I think, should just go sideways, if anything, and then we'll eventually start to head higher. The stochastics and momentum indicators are right on their lows. So, let's see, we'll have a leg up soon, pretty soon. So that's the Aussie. I like that. Now let's have a look at crude. Now, I think where are you, crude? There, let's have a look at the Brent contract. Now, the reason I thought it's good to talk about crude, obviously because we know that we're getting close to what resolution in the Middle East. Now, I think when you look at what both sides are saying, I think both sides want to actually come up with an agreement, but both are playing it quite close. Both are playing it, whether they still striving for what they want to get. Now, I think when you look at Trump, will be always out there saying we're close to a deal. Iran is saying that we're not close to a deal, or we are close to a deal. There are points on the agenda. I think one of the disconcerting thing was that the nuclear disarmament side of it wasn't actually included, and they pushed that out for another 60, 70 days. And that to me, if that is the case, then that is a little bit of a concern. That should keep prices relatively buoyed. But I think over in essence, when you look at the conflict, the market will check and say, well, if a resolution is close, that's great. Straits of Hormuz open, that's great. And oil should trade lower on the back of that because there's no reason why it should be up at those levels if that's the case. Now, when Epic Fury started, it started around 72, a little bit lower than that, I think, on the Brent contract. Yeah, around here, around this level 70 area. So I do expect it to come back to 80 or at 75 or that sort of level. As to whether or not it happens overnight, who knows? But I do think that if there is close to a resolution there, then you'll probably find that pressure will there. One of the reasons why it'll stay higher, I guess, is the key. One of the reasons why it should trade back up to 110, particularly when they're all negotiating, and also particularly when a lot of the economies do need the oil. So a resolution needs to be found, and that makes both of them winners. And if that's the case, then oil should trade lower from here. As you can see here on the hourly chart, we've come right lower at 98 to 90. And I think that here, I don't really, I sort of see what the States does, but obviously we open and we tend to sort of have a little bit of a panic on the first market. But I think rallies in the crude oil market should be sold into unless, there's a falling out and Trump goes in again, which is always a bit of a worry. Okay, so that's the oil price. It is on the trade recommendation. And we've done a little bit of work on that one, so have a good read there. Okay, let's have a look at S&P. S&P 500, we've got a horrible position there. and a little bit of divergence there, which I thought would actually be quite comfortable. Let's see, the next 24 hours is going to be quite critical for that position. If we close back below 7,500, then I'm comfortable, or even 74, 74.50, I'm comfortable holding the short, but I do expect a sort of euphoric rally, on the news that we're getting close to a deal. So that to me is a bit of a concern. We did have that divergence there, which I liked. I normally like for it to trade lower, but this time it didn't happen. And let's just go there on the hourly chart. As you can see, right up there, right on those historic highs. So I think let's see what happens from there. Okay, we talked about that. Let's have a look at gold, because gold we've got a reasonable position on. I like the momentum indicators down here. They look quite positive, and I wouldn't mind to see a lift. Now, I guess with a resolution in the States, what does that tell us about gold? It basically says we have to reframe ourselves about interest rates because the inflation that we've seen will be a blip. And if that's a blip, then people will come back to gold. And likewise, they'll come back to silver as well. There's a gold price there, a little bit of a blip high. I would like that to continue, but I think dips can remain supported on that. Silver, let's have a look at silver because I think silver, as you can see, a nice good move to the top side. I like silver for all the right reasons. This is the dip, still quite comfortable being long here, and I think you can quite happily buy dips. Right, okay. Well, that's about it from me for this week. Hope everyone has a great week's trading. Let's see what happens in the state. Could be quite volatile, but that's it from me. Bye for now.